afternoon, everyone. It's Chris from Solstice ATR, Axel. You can find us on the website, Twitter, Instagram, Discord, and as well as YouTube. This weekly video is for free for everyone. You can check us out, give us your commentary, subscribe to YouTube. It gives you an overall view of what happened in the prior week as well as what's going to happen in the coming week. Remember, we're not a broker-dealer. Our past performance doesn't give us any indication of our future results. Remember to check the regulations. The data cannot be copied unless requested from us and by getting in contact with us. Let's go to the first slide that I have up here in the PowerPoint. I put a small comparison between the Fortune 500 company. It's the green, white, and the burnt orange or brownish colored candle. This is the Fortune 500 companies since last year on November 20th, coming up to March 9th or March 8th of 2024. We have risen quite a bit, while the combination of those candles, I added them together, Apple, Google, and Tesla. They part of the S&P 500 as well as the Nasdaq sectors. S&P has 13 sectors, Nasdaq has 5, but I wanted to show a comparison between these three companies in relationship to what's happening in the overall market. We are going on basically a couple of different other stocks such as Nvidia, Meta, and the chip manufacturing in the AI industries. Remember, some of the consumer products, staples, banking, a small cap, mid cap, are trying to make a return, especially in the mid cap and small cap in relationship to the tech sector. We have to pay attention to what the rates are in the Federal Reserve Board and where we are today in relationship to the overall market. So we are in a downtrend on these three instruments. They are part of the S&P, part of the Nasdaq, but I want you to remember, going up on a straight line, straight up in a linear regression uptrend, eventually, I don't want to fall hard, but I want to pay attention to the bottom indicators to give us an indication of change in trend. You can see where the support is, where the high resistance are. We had an engulfing candle on the weekly chart. This is a daily chart on the SPX, which is the Fortune 500 company, or the SPY you can use in the ETF. Remember, once again, check us out. Give us your commentary, smash the like button, and let us know what we can do to help you. I put the combination of three instruments here, S&P, Nasdaq, and the Dow, by adding a plus sign in front of them. These are the E-mini. I've showed, where the level high was in 2018, the March 23rd low, and the February, the 2022 highs, and the 2021 highs, the 2022 lows, the consolidation in 2023, the March and January. We had the Silicon Valley reset, retested. We retested the breakout of this consolidation, and we rallied up. We have a professional gap in here. We have to pay attention to it. But what I want to do is show you what pitchfork, using a pitchfork. It's just a tool. It says Andrew's pitch. We can see that this point here is the high of the year, and I take the low for and I connect it with the high of 2023, and we can see we are reaching the linear regression uptrend channel. We have the 23% and the 38% down here, but this is the break out of this flag. If I zoom in here, we can see that we came out of a cup, a handle, and a breakout, and we got this professional gap here. We can see that in the pitchfork where the F6 is, the F5 is 50%, the F3 is 38.2%, and 116 SMA. Even coming back, filling this gap and the breakout of this candle, going to get in this consolidation before, rallying higher. It gives us an overall view where we can come back. Doesn't have to, but we have to pay attention to the overall sentiment in the overall market. And this is why I used those three. I did not use the Russell by itself. What I'm going to use is micro 2K to show everybody how the micro small cap or the IWM or IWN value is playing in relationship to the overall market. We can see where the lows were, where the highs were. Where we are today, we are above the 25% in the last three. We were consolidating in the prior after the 2022. 2023 was side market. We created a W. We're creating a cup. If this is going to continue, we have to pay attention to this uptrend channel. If we break up, we have to take these two candles out and come back to the 2021 highs and the consolidation when we looked up and we failed. So small cap and mid cap, you can take a look at them and pay attention to them in the overall market. Let's go right now and take a look at the Nasdaq 100, the micro NQ. This is the weekly. We can see where we are, where we broke out of, where the consolidation was, and where the retracement. This was the consolidation in 2020, the breakout, coming back, retesting this area and continuing higher. We created a cup, a handle, which is a flag, and we broke out and we got this gap here. Let's go to the daily chart now on 1 year. And what I wanted to do is show you that the Nasdaq 100 has been going higher and higher every time in a sharp linear regression back and forth in this channel. What I want to do is pay attention to this linear regression uptrend channel on the daily, the 50 SMA, and the breakout of this candle in relationship to the last 3 weeks, because this created a V-shape retest, breakout, come back, retest it, breakout, rally, retest, and breakout. But we've been consolidating in the last 3 days, in the last 3 weeks. If I zoom in here, we've been, zigzagging a little higher, coming back, zigzagging, coming back. But this engulfing candle on Friday is making me worry about in case we break this linear regression channel and this downtrend channel here. So what I want to do is take 30 days here, intraday. We're going to do 30 days, come down here to 30 days. And I'm going to use 6 hours instead of 4. Most people use 4. I want to show, because the cycle in a 24-hour is actually 6 plus 6 plus 6 plus 6, that makes 24 hour. I'm using that 24 to give you an overall view. The gray area is the overnight. The black area is the U.S. market from 6:30 till 5:30, the composite and the S&P, Nasdaq, the Russell, the Dow, they trade till 5 p.m. Most stocks trade till 4, from 9:30 till 4 p.m. in the afternoon, East Coast in New York time. I'm at the Pacific, which is in California. You can see my time zone's a little bit different. So we can see the prior week we were range, we broke up. We had this week's range. You can see this was the down, the left. And if I take from this area to this area, you can see where the support is, where the 61 is. I don't have a 78% and I don't have a 23% here. So what I want to do is get a measured move. And this measured move going to take the high of the week and the low of the week till Sunday. We measure the prior weeks and we edit the property and we expand it to the left. Edit the property. It was March 3rd. And we can see where it is. Instead of putting 13, I'm going to use 00 to show you from midnight where the market started in the European Asian market, coming to the Dubai, and eventually, the European zone, Canada and South America, including the US market. If I zoom in here, we can see where the high is, where the low is, where the 50% is in relationship to the 25% and the 23 here. And the 78%, usually between 80 and 100, we usually get reversals, vice versa between the 0 and the 20, or the extensions of the 50 and the 61, and 180 to 200, and vice versa at the bottom. So we're going to trade what we see, and you can see in that I have a MACD here, which has an average of both sides of the market. We are coming in and out of compression. We came out of compression to the upside, eventually fell down. We rallied up and came back in. This candle is a very important candle. We have an engulfing candle from the Thursday's candle, because we had this gap in the overnight. If I do take the overnight gap off, and what I want to do, go to futures, you can see show extended hour. If I uncheck it and I apply it, you will see where the gaps are in relationship to the overnight price action. You can see those gaps. You always pay attention where the gap is. Do we refill or do we continue higher? This is a very important gap between here and here. And what you can do to see the gap is basically grab this area here to this area and highlight it, and you can extend it to the right, edit the property. And what I would do is just to make it a little bit visible to the eyes. Let's say I pull it out to 12 or 13. You can see that where it is at in relationship to the overall market. But if I go a little further out, instead of a 30-day, I use a 90-day range, 6 hours. And what I want to do is basically show where the gaps are in relationship to that linear regression uptrend. You can see this oval, I duplicated it to here, and we do have one small one here as well. If I zoom in between the 17,071, 17,159, you can see that this area has a small little gap, and I can mark the same thing here between this candle and this candle to oversee where the gaps are in relationship. Oops, wrong one. Edit the property. Well, I'm sorry, activate the property. I reactivate it, activate it. I'm going to take that down to here. We're going to readjust it. And this is the gap that we have. Edit the property. And I can extend it, let's say, till March. And I'll go till 3/19. And you can see where that gap is in relationship to the highs and lows. Even coming back to here, we are still, we can lose that downtrend, the uptrend channel. Even coming back, it's a healthy area to come back to. And the 737 and the 7500, the backside of this channel where we broke out of, is an okay price, because the distance you travel from here to here is the same distance from the 0 to 100. Coming back to this area isn't okay to recover and continue higher. But if we fall further down, pay attention to what the market gives you, not what you think. Okay, let's do one more. I want to XLK on purpose because everybody's looking at it. And in the tech sector, you can see that the XLK on that 4-hour range, you're creating an M pattern. If this M pattern falls and this consolidation at the 205.30 cents and we lose it, we double the distance back to the 200 SMA and the 250. Coming back to this area is an okay area, but I'm not saying you have to pay attention to the VIX. We'll do VIX, the ETF, and you can see where the ETF has been range bound between the $12 range and the $15.50. In case we break up, we fill the gap. You can see it on Friday. We retested it and fell back in, but we are still in a uptrend channel on this sharp time frame. If I grab this from here to here and I want to put a linear regression uptrend channel, I want to pay attention to this channel, which is a sharper channel. And if I put one from here to here, I don't want to lose here. I want to hold this area in order to continue higher if the trend does change in the overall market. And Tuesday, there's a report coming out. Pay attention to the Tuesday report to see what the announcements are and what the Feds do in the U.S. market, in the overall market, consumer products, staples, banking, rates, and so on, and the CPI and employment. So, and most importantly, trade what the charts offer you. The IWM, you can see it is in an uptrend. We are grinding higher, but pay attention to this consolidation here where we broke out of this area, and this is a 280 cents, 290 cents. It's a very important area to hold, and 197. So if small cap going to continue, pay to it. And remember, gold had moved quite a bit since the 2001, 2000 area. Gold has shown some very good strength. Bitcoin has shown some strength, but I would rather get the retracement before we can continue higher. And if you have any questions, you'd like to get in contact with us, once again, get a hold of us by calling us, giving us an email from the website, and give us your commentary.